Hi guys, Marco here. So today we look at two things. Meet Kevin that has just sold his entire portfolio and also what to do in this stock market crash. Let's dive straight into it. And we don't beat around the bush on this channel. So as you know, probably unless you've been living under a rock, the market has been going down and actually today it touched minus 12% from all-time high, from the highest it has reached just 20 days ago, more or less. So the point being, is this gonna be the big crash, and why has Meet Kevin sold? Well, the reason why Meet Kevin sold, and to be honest, I quite like the guy, but I do think that the reason why he sold is because he's very scared about losing his 20 million portfolio. Obviously, it's a lot of money. Imagine being that rich yourself and having that amount of money just at stake and seeing it just going down the drain. Okay, most of that money came from him selling the course, and that is the very reason why I do not agree with him at all, because a course like his, like $900 course for something that, to be honest, you can learn by simply subscribing to this channel that I'm running myself, okay? So it's just not really worth it. And again, for example, I don't mind like things like Patreon. I have a personal Patreon, but the point being, it has to be cheap. Like my Patreon is just $3 a month. And if you want to support me, link in the description. But let's move on from Meet Kevin. So is this the big stock market crash? And what should you do? Well, what I'm showing you on the screen is the Fed balance sheet. Now, back in November, I told you that there was this tapering that was incredibly important, and that would change the way we look at investing, at least for the short term, because from back then the Fed was supposed to start reducing the amount of money they were pumping into the market and into the bond market, and this is what we are seeing on the screen right now. So if you look at back in, for example, November, I told you, right? So November was here. Now we see that from basically when the announcement came out, the amount of money pumped into the market has actually not slowed down at all. If maybe just a small percentage, let's say 10%, but based on what the Fed said last time, it was supposed to slow down much more. Literally run dry, basically no more money pumped into the market by March. And guess what? It's almost the end of January. But the Fed is not the only thing, is not the only organizations that decide what the bond yield is. There is obviously other companies that were in the market, in the bond market, and that they are actively buying and selling bonds. Like the biggest companies like JP Morgan, Bank of America, they are the biggest players, as you can imagine, and they did not buy too much of these bonds. And that is the reason why the Fed is really not leaving the bond market. And it seems like they really will have to make some very tough decisions, because all the problems we are seeing now are due to the Fed just simply not reducing the amount of money that they're pumping in. So has JP Morgan and Bank of America jumped in? Well, if you look at this other chart, which is the 10-year yield of the US 10-year Treasury note, so the 10-year bond, we see that, and I want to just look at the last 3 months, we see that the amount, basically the yield has gone up. Lately has gone a little bit down, but that is because we think, and I think, that JP Morgan and the big banks have come back to the market, because obviously they are very slow. You have to imagine these companies being incredibly slow, like a big corporate, and they decided that they will join back into the bond trading market, but at the same time it's not going to happen overnight. So what is interesting to see is that compared to last year, obviously there is a massive, much higher bond yield, and that's not just the 10 years, but just the whole bond curve, yield curve. And so this is a sign that for me, there is the possibility that this delay in the Fed tapering was mostly due to the Fed waiting on big banks to come back to the market. And so in this environment then, is it a good time to sell? Is it a good time to buy the dip? Well, there are two things that I want to talk about in this part. So first of all, depending on your goals, your financial goals, why are you investing? Let me tell you why I am investing, and then let's start from there. Well, the main reason why I'm investing has been and has always been, and my subscribers know that, because I want to buy myself a house. Not a house as an investment, but a house to live for myself. And to be honest, this is more or less what I probably be able to afford with the amount of money I have, this horrible place. But the point being, this year is the year where I'm thinking of actually buying. And I know the prices of the houses have gone up so much. And to be honest, I'm thinking, hey, maybe I will wait a little bit, but there is a very strong chance that I will actually go for it and buy a house. And so if it happens this year or next year, I will need cash, obviously, to buy this house. And so in my case, and also in your case, well, if you're investing for such a short term, well, you should be very wary of obviously investing more in the market. If you already have quite a lot of profit as myself, and my subscribers know that, and especially my patrons and in my Discord group, they know everything. Join my Patreon to know all my moves, but they know that I sold some of my stocks obviously at a profit. And the point being, it's the best way to obviously nail down your profits in this situation of uncertainty. Now, I did not completely sell as Meet Kevin did. I kept quite a lot on the table still, because nobody knows what the future holds, even in the short term. And even if all the indicators that we have available just now are looking and indicating a potential further crash, maybe we're not at the end of this market pullback. But then on the other hand, if you are thinking of investing for more than 5 years, and this is what mostly investing is about, well, in that case, you really have to bear with the market. You need to just soldier through this storm, because at the end of it, there is going to be a brighter future, an all-time high, even higher than today, and potentially buy the dip. Now, is it today then the time to start deploying your cash and start buying the dip? Well, the Fed is about to potentially, and this is what's about to be decided, is about to increase their interest rate, which is something that will affect the entire market and potentially draw the market even further down. It will drop even more because bonds will become even more interesting for big investors. And so this is just the first of potentially more interest increases, and the money will simply go from stocks into bonds. So I personally think that this is just the beginning, guys, and the Fed can really crush the market if they're not too careful. So if you want to start buying now, well, go ahead and do it. But if you've just got started, if you're just putting your first money into the stock market, hang on a moment, just wait a little bit more, and most of all, subscribe, because on this channel I will make more video updates like on this one, where we'll talk about the whole market and what to do in this stock market crash and future bull run. Thank you for watching. See you in the next video.